Eric Muather, themuather.com, with world market analysis for the weekend of September 24th and September 25th, 2016. Let's take a look at markets here. We see pretty much, let's call it down session, slightly down as far as Asian markets close for the end of the week. European markets also closed slightly lower after Friday's session. And with about 2 hours to go on Friday, this is how the Americas are called. Brazil is down about 0.8, Canadian market down 0.8 also, and the S&P 500 is down about 0.48. We shall see how we close. Let's take a look at those world charts. And what's the biggest takeaway? In this video, what we're going to see for most world markets, day to day, looks like we are pointing down short term. But generally speaking, even though day to day looks like markets want to stall around here, it looks like we haven't seen and there's no evidence of any major sell signal. So yes, day to day pullback could take place, but we haven't seen a major break suggesting that there's the beginning of a major drop in world markets. As an example, let's take a look at the Australian market on the weekly. Coming off recent highs here, it's pulled back, but bouncing this past week. Why? Because the daily is coming and showing RSI support on this line here. So nice support, which means that now it is back to holding support and could stabilize around here. Keep in mind also, it is bouncing nicely at the 50 level on the weekly RSI. So uniform activity below 50, back above it for the re-entry there. Bounced below 50, back above it for the re-entry there. And now we've touched 50 and we are already beginning to see the signs of a bounce. So as long as that weekly RSI line is holding, this market should be at the very worst sideways. If we take a look at the Chinese market, we can see it's stuck in a huge wedge on the daily chart. So this wedge will have to resolve either for a bullish move or for a breakdown of this wedge. So again, until we can resolve either out for a bullish move or down for a bearish move, this market seems to be stuck in this huge daily chart wedge. Keep in mind, we've been talking about this line here on the weekly RSI, and this is 3 years weekly data. And you can see ever since the break here, this market has been stalling on this backtest failure over the last couple of months. We've been unable to clear that RSI resistance line during all these highs. So we can clearly see that as long as the market is trading below this blue line on the weekly time frame, the market should continue struggling. Another way of looking at this is, if you really want to play long the Chinese market, you might want to insist that first and foremost it clears the recent weekly closing high for 2016, and the level to watch there is 3108.10. So without a breakout here, one can assume that net this market is suspect. Sticking with the 3-year weekly charts, take a look here at the Nikkei, and you can see here that the Japanese market is also stuck in a long weekly price wedge. So we are stuck within this wedge. A movement above or below might dictate the next swing trade. Also, the RSI is forming a nice wedge, and here we could either break out for a fantastic move higher or break down for a fantastic move lower. So we have to wait for the resolution of these wedges on the price and weekly RSI before we can really know what the market is trying to do. Keep in mind, anybody wanting to go long might want to wait for the breakout above the recent weekly closing high, and that level to watch there is 16,965.76. So this is a recent weekly closing high. Bulls would like the market to clear that level if there's going to be any surge in prices. Otherwise, failure to break out and a movement below this price wedge on the weekly and a movement below this RSI wedge also on the weekly might suggest that the next swing trade could be lower if the market breaks those wedge formations to the downside. If we take a look at the Nifty from a 2-year standpoint, we can see that on the weekly there seems to be some little bit of a pause here as the market is trying to break out above the recent weekly closing high of 8866.70. Without a breakout above this recent weekly closing high, this market could actually start stalling. So bulls need to see a breakout. More importantly, bulls would like to clear the 2015 weekly closing high. So you'd want to see a breakout if you're a bull in this market above 2015's weekly closing high at 8937.75. Without a breakout above this level, eventually this market would lose momentum. In fact, take a look at the weekly support line, which is where the market ended the week. If this RSI line is broken to the downside, expect a significant pullback. Also, if you take a look at the monthly chart for the Nifty going back to 1990, you can see that a breakout on the monthly chart is needed. If this monthly chart is to record higher levels, keep in mind the level to watch there is 8844.60. As of right now, the market has been unable to close above that level. So the more we struggle to move above this level, the more eventually we roll over and point down. Keep in mind, that would not be a good setup, because if the RSI on the monthly stalls around current levels, so if the RSI stalls here, that's not a good sign. So the market would want to move higher, otherwise stalling around current levels has not been a good idea. Going back, let's call it even to here, sometime in 94, before this drop, this is where the market broke down here in early 2000 during this period before that drop, and broke down again here in late 2007. And of course we had the bear market of 2008, and here we were rejected and a break of that trend line for the highs there. And recently we hit that level and stalled, which is this high somewhere here. And of course in each instant the market went down. So what I'm saying here on the monthly chart, it needs to be breaking out. Otherwise, if this RSI rolls over around here, that might suggest that the next major swing trade is down. If you take a look at the chart for the EuroNext, and this is going to be my summary for the DAX, for the FTSE, and the French CAC 40, because this chart displays exactly what I'm talking about here, and we've seen this in other markets in this video. Take a look at the price forming a weekly wedge, and the market is stuck within this wedge. We'll see which way the market decides to take for the next major swing trade direction. Take a look also at the RSI on the weekly, and you can see that there's also a wedge. And that's why I was saying that yes, markets could pull back day to day, but we haven't seen any major sell signal. A short-term major sell signal would have to come only when if we move below this wedge, or if we move below this RSI wedge. Since we haven't seen a break of this wedge to the downside, there is no major sell signal in markets, even though day to day, of course, pullbacks could take place based on daily chart resistance, as indicated by the EuroNext daily chart, which has come back to test the recent break. You can even draw it this way. There was a break of this trend line here, and now being back tested. That's one way of looking at it. The other way is to see that, check out where the break took place recently, and it's the same type, the break there, and now being tested. So you can see that day to day, given that the market was down slightly on Friday, that day to day there's a pullback, but in terms of the meaningful direction, the market continues to be sideways with no major sell signal anywhere in sight as of right now. If we take a look at the weekly chart for the South African market, it is showing support exactly where it needs to show support. Based on this entry, there was a breakout short which moved the market out of this range. We are higher since then. Market's been bouncing on that 50 RSI line, or this line given the perfect entry on a weekly chart. Bounce here on the 50 for the re-entry on a weekly basis, bounce on the 50 line for this re-entry, and now you can see at the end of this week the market has turned around and is holding support. So as long as the weekly chart is bouncing on this 50 line and on the green line, one can assume that this market continues to be sideways at worst. At some point, should we break below that line, is when we can say that the market has given a major sell signal. As of right now, we haven't seen any major sell signal. The Canadian market shows perfectly why I'm expecting a pullback from markets day to day, because as you can see here, there was an attempt over the last couple of days to make fresh daily closing highs, but that came at the expense of the RSI since it made a lower high. And also keep in mind that this high here in price coincides with the RSI failing to hold above 61.8, which tends to be the worst type of negative divergence. So day to day, this chart is suggesting to expect a pullback as far as the Canadian market is concerned, even though we haven't seen any major sell signal on the weekly chart as of right now. Of course, the risk for the Canadian market is on the monthly chart, as we've been discussing for many weeks. It is this line here, this recent break in the RSI right here brought the market off the highs of 2015, and so we are back to test that break line. And if the market cannot move higher, and if this is confirmed as resistance, we can start speculating that this is going to lead to a major pullback. And if you go backwards on this line here, keep in mind the red line so happens to be at about 61.8 on the monthly chart, and you'll see that the major sell-offs have begun on this line here. The drop below that line began this pullback, which led to a bearish move, and also here this break of, let's call it about late 2008, led to this major drop here. So the problem with the monthly chart is the more it stays down, the more it confirms resistance on this line, the more we can start expecting that the next major and meaningful move as far as the Canadian market is concerned could actually be lower. And this is not the only market showing that. If you take a look at the Brazilian market by way of the ETF that trades in the US, EWZ, I've been talking about this line here. This recent break, not recent, but in 2011, brought the market off those highs. If you extend a line from there, should be something like that. This is what is being tested in the current market. We can see that we hit that level in 2014 for the highs there. This led to a major drop in terms of percentage terms, and now we are coming back to test that general area. Resistance around here could actually lead to major drop on this Brazilian market. And also keep in mind there's a recent line of resistance on the weekly RSI, all of them coinciding with exactly where the market seems to be stalling. So month to month, there's a risk that markets are turning down, and the more they are down for the month, the more we can expect a changing climate where stocks are going to be generally going lower. So the risk is, until we break down and give major sell signals, the market is sideways. And for now, daily charts are pointing to a pullback, which if it rolls over significantly would impact the monthly charts, which again would give their own fresh sell signals. In other words, it's probably not looking that great, even though we haven't seen any major break. Eric Mwatha with Mwatha.com. As always, good luck, peace, and blessings. EAC.